Hello, and you're welcome to Global Business Insights, where we consider the main headlines all over the world and go a little deeper from a business perspective. The IFO Institute said today that a nascent recovery in Germany may already be losing steam as its index fell for the first time since January. IFO Business Climate Index, based on a survey of 9,000 companies, fell zero point 0.7 points to 88.6, lower than expected. The IFO president, Clemens Fuest, also said manufacturers were more skeptical for the months ahead in the Eurozone's largest economy. Brussels has today accused Apple of breaking EU competition digital markets rules. Only last Friday, Apple said it will delay its AI features in Europe to ensure features were fully compliant with EU legislation. And on macroeconomic data, we expect this week, on Friday, both the US headline and core PCE readings are expected to be up 2.6% from a year ago, which would both be lower than April's readings. We also get US final Q1 growth rate expected to be 1.3%, unchanged from the previous estimate. And May new family home sales expected to rise to an annual rate of 650,000. New orders for manufactured durable goods also expected to climb 0.2% to $285 billion. Other US data include Conference Board's Consumer Confidence Index on Tuesday, expected to increase to 102.5, and on Friday, the final UK Q1 GDP figures is estimated to be up 0.2% year on year, like in previous estimates. China is reported to have floated lowering its existing tariffs on large engine cars from the EU in return for scrapping planned EV levies on imports. This is as Beijing agrees to talks with the European Union on higher tariffs that were slammed on Chinese EV and components of EV vehicles. The focus will be on the politics this week, the uncertainty in France, presidential debates in the US, and the expected transition to Labour in the UK. All will be closely watched by analysts and markets. On Friday, an Indian-born billionaire, 79-year-old Prakash Hinduja, and 3 family members were sentenced to prison for exploiting domestic workers at their lakeside villa in Switzerland, allegedly seizing their passports, controlling their movements, and making them work up to 18 hours a day. And in Nigeria, Dangote is calling on the federal government and the National Assembly to protect Nigeria's interest, as international oil companies are reported to be plotting its failure. This they do by failing to supply the refinery local crude despite paying a premium price. Since it passed its new Digital Markets Act against big tech starting March this year, regulators have been seeking an opportunity to test its teeth. The rules were designed to help startups by forcing larger online gatekeepers, most of whom are US companies, to open up their businesses to competition. Thierry Breton, the EU Internal Market Commissioner, said that with the new action against Apple, he's taking further steps to ensure Apple complies with the DMA rules. If found guilty, the iPhone maker faces a penalty of up to 10% of its global annual revenue. We could run into tens of billions of dollars, and fines can rise to 20% in the event the offense is repeated. Also speaking at a conference on the DMA in Amsterdam, Margrethe Vestager, the EU's executive vice president in charge of digital policy, said the DMA is simply asking for a fair, open, and contestable marketplace. Apple said it has done no wrong and will fight its case fiercely, prepared for a long court battle. Brussels is also looking at if Apple was imposing too many restrictions for users to download and install alternative app stores. Apple was fined $1.8 billion this year for stifling competition from rival music streaming services, a fine that is still being contested. Apple believes the DMA seeks to discourage innovation by denying the advantage that has cost years and billions of research and development to gain. Also, Apple has repeated that relaxing some of its rules will erode the quality of customer experience. If the intention was to slow Apple down, it certainly is working as Apple pulls back on the European launch of new AI features because of EU rules. However, it's likely to be a long drawn battle that can extend for years before resolution, years that Apple's competition can exploit to catch up. At a visit to Beijing by Germany's Vice Chancellor aimed at soothing tensions, China has agreed to enter into talks with the European Union over the decision to impose higher tariffs on imports of Chinese electric vehicles and EV components. Robert Habeck, Minister for Economic Affairs and Climate Action, said it was a first step and many more will be necessary. According to reports, Beijing wants the EU to scrap its preliminary tariffs on Chinese EVs to kick off on July 4. This also comes as analysts are saying the solar boom further complicated by the new rounds of tariffs on imports from Southeast Asia, and many will be shifting to countries that aren't in the tariff crosshairs. For example, we gather that some China-based manufacturers, Trina Solar and Longi Green Energy Technology, will be investing in Indonesian facilities. Still, production costs will be higher than in China, and the economics of transition to cleaner fuels will increasingly favor fossil fuels, thanks to the ongoing tariff brinksmanship, which looks set to worsen. But also today, we gather that President Xi Jinping's government has been dangling both carrots and sticks. Beijing had initially said it could unleash a 25% fee on large, mainly luxury Mercedes-Benz and BMW saloons, and now says it will suspend the additions, even offering to reduce some tariffs. Beijing hopes the powerful auto lobby will pressure the EU's executive arm and other member states. German Chancellor Olaf Scholz says his government would like to see a negotiated solution. That could still happen before extra duties are set to take effect from July 4. Now for an unusual story on business ethics. A Swiss court handed jail sentences to 4 members of one of Britain's richest family for exploiting Indian staff at their Geneva mansion. The Hindujas, whose fortune, estimated at £37 billion, could afford to do so much better. Still, Prakash Hinduja and his wife Kamal were on Friday each sentenced to 4 years and 6 months in prison, and their son Ajay and his wife Namrata received 4-year terms. The practice of bringing servants from native India to Europe and treating them badly, including allegations of confiscating staff's passports once they arrived in Switzerland, paying significantly below minimum wage, definitely is difficult to defend, more difficult to understand why it was necessary for a billionaire family to do this. The case points to bad behavior, inadequacy of labor laws in emerging poorer economies, which inadequately discourages abuses of the more economically vulnerable in high unemployment environments. A review of labor laws in Africa and developing economies could show significant scope to protect the poor from being cheated of their rights. Minimum work conditions should be in place and adequate penalties and better monitoring also needed. When it comes to labor laws and conditions, that which is illegal in Geneva or UK should also be illegal in Lagos, Johannesburg, or Mumbai. Human rights are universal rights, and poorer nations need to prioritize social safety nets that offer universal protections against abusive labor conditions. The damage of colonialism and apartheid beyond the economic rape extends to some mindset distortion and the poisoning of the human conscience that may take longer to heal. Many have been programmed by experiences they witnessed, and there is still a discussion to be had on the impact of a colonial oppression in shaping post-colonial elitist practices. The local wealthy and political elite are now living in the palaces and enjoy vast gaps in education and opportunity. Not that this excuses the crime of exploiting fellow men and women. For some, consciences numbed by repeated scenes of locals abused by colonial lords have yet to be retaught that it was wrong for the advantaged white to treat locals as less equal and less deserving of normal courtesies. A thriving political and economic elite may not be as sensitive as they should be to ill treatment of staff, and the complicity of the legal environment has normalized much abuse. It's comforting to see bold and blind justice. Perhaps the appeal by the Hindujas will reduce the sentence, and the Hinduja servant will now have a better life in Geneva. One hopes someone is learning from this case. In Nigeria, we see a major drive to diversify the economy bearing fruit as the Minister of Solid Minerals Development, Dr. Dele Alake, presents to President Bola Ahmed Tinubu the latest gold bars sourced from artisanal and small gold miners and refined by an agency of the Ministry, Solid Minerals Development Fund, notably also meeting the London Bullion Market Association delivery standard. Dr. Alake said the refined gold would be sold to the Central Bank of Nigeria to bolster foreign reserves. Still in Nigeria, the management of the 650,000 barrels per day Dangote refinery at the weekend accused international oil companies in Nigeria of planning to ensure the failure of the $19 billion refining facility. Vice President Oil and Gas at Dangote Industries, Devakumar Edwin, said the multinationals were deliberately frustrating the refinery's efforts to buy local crude by jerking up premium prices above the market price. It's unclear how Dangote wants the government to intervene. Nigerians stand to gain by lower costs if IOCs supply the refinery, but it's unclear if they can be compelled to do so, as their equity crude belongs to them to do as they wish. Nigeria All Share Index closed down 0.09%, while Johannesburg Stock Exchange All Share Index closed up 0.62%. European stocks were positive as investors look ahead to fresh economic data, still digesting central bank decisions and bracing for political shifts. As we speak, if you look at European stocks Europe 50 is up 0.63%, FTSE 250 is up 0.59%, FTSE 100 up 0.53%, German DAX up 0.89%. We also have the French CAC 40 up 1.03%. US market so far looking mixed. Nvidia seems to be still pulling back, down 4.72% as we speak. S&P 500 is up 0.27%. Dow 30 is up 0.89%, while the Nasdaq is down 0.28%. Well, that's it for me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Global Business Insights will be off for a short holiday break from Monday, the 1st of July. We'll be back on Wednesday, the 17th of July. Thank you so very much for watching. Bye-bye.